Hello traders, welcome back to our channel. In this video, we are going to learn about a very important concept that requires us to know how to count the cycle, but will actually issue very high probability entries. So without wasting much of our time, let's actually jump into the content. The first thing that we always need to see is a completed cycle. It might be on the M15 time frame or on the H1 time frame. It all depends on which time frame that you love to trade most. Basically, levels are what completes a cycle. 3 levels to the upside or to the downside means a cycle has been completed. So in this case, we are going to jump into examples to see what a completed cycle looks like. So I am going to use rectangles to mark the levels. If you have been following us for quite a long time, you know that we use the institutional market maker method. So in this case, we can see that we had a first drop, a continuous drop. Levels are basically a concept of advanced market structure, whereby we actually look to see lower highs or lower lows, or higher highs or higher lows. In this case, we can see a high being created and a low being created, then another high being created, another low being created, then the last high being created. So after these number of impulses 1, 2, and 3, we expect to see a completed cycle. So whenever the third impulse coincides with the US session, we actually call it a special cycle, whereby we are actually going to trade off the high of yesterday. In this case, if we count these levels, we can see that we had the first one, the second one, and then the third one. So like this: first level, second level, third level. And the third level actually coincided with the US session. So our entries were going to be seen at yesterday's high. In this case, these black traces marks a day, and the start of a day, end of a day, a new day started, and they had to actually come to retest yesterday's high. So in Forex, we do not look for certainty, but we look for high probability. In this case, we were going to enter this particular trade, although we didn't touch exactly yesterday's high, because they do not do so much of the times when the cycle has been completed the previous day. Let's have more examples so that you fully comprehend how to apply this particular strategy in your trading. In this case, we can as well start to see that we had another point where we can see these impulses to the upside. We had first high, first low, second high, second low, and then the last high. Marking those impulses, we are going to have something like this, where we had first high as the first impulse, second one, and then we had the last one, which is this one. Third level coinciding with the end of US session means tomorrow we are going to look for a trade of yesterday's high. We actually had this as our point where we were anticipating to see it retest, and the market went our way. So someone may actually say, we are on Euro GBP. Does this work as well on gold, silver, or indices? Yes, it does. You just need to be able to identify impulses correctly. Let's go on gold and have more examples. On gold, what can we see? We need to first look for the impulses that we were talking about. In this case, this was a low from the higher time frame. From that low, we started creating these highs, lows, and then the last high. The third level coincided with the end of the cycle, and if that happens, we've said we anticipate to see the third yesterday to trade off yesterday's high, like that. And then the second impulse, then lastly the third impulse was issued. 3 impulses to the high, then we actually know the cycle has been completed, and then the market actually retested yesterday's high at this point. right? And the market went our way. We can go again looking for the same parameters or the same examples, and we may as well start to apply the H1 time frame. I've said at the first part of this video that we can use this particular strategy in the M15 or the H1 time frame. If we go on the H1 time frame, this is what we are seeing. We can see that we can count levels using days of rise or days of drop. In this particular case, we had a day of rise, another day of rise, another day of rise, meaning the cycle was actually complete. Marking the levels of those particular days, we can see them like this. First day of rise, second day of rise, and then third So the cycle looked like this, where we have 1, 2, and 3. Completed cycle, and the third level coinciding with the end of US session, we expect to see the market retesting yesterday's high, right? On this particular day, we actually came back to retest yesterday's high, and the market went our direction. Basically, that is what we are going to be looking for. In summary of everything we've talked about, we have said 1, see a completed cycle, see third level coinciding with the end of the US session, then expect to see the market retesting yesterday's high the following day. On that note, we come to the end of our video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. I'll leave the link in the description box below.